the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi everyone, I'm Mark Rosenthal. We are tracking several chances of rain coming up over the next few days, so please stay tuned. Here's what's happening for today. Lots of clouds. There'll be a little dim sun. It'll be in the 60s along the coast with the sea breeze, low and mid-70s inland. Cloudy overnight, chance of a burst of showers coming through. It'll be mild, temperatures in the upper 50s. Showers will end tomorrow morning, but clouds linger. Temperatures in the 60s and low 70s. On Friday, increasing clouds, mild, low and mid-70s. Showers could arrive by dark. On the Money Matters Radio Network, I'm Mark Rosenthal.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services. Adopt Us Kids and the ad count.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost All you have to do is call 800-393-4001. The title again is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Kicking off our show today, it's Chuck, Paul, and Tucker with you, and we got a piece from the Wall Street Journal. It's titled, Wall Street Bets the Worst of Trump's Trade War is Behind It. And this after the S&P 500 added about 118 points yesterday. Dow was up 740. NASDAQ was up, who cares, pretty big. And so overall, the tenor was not just a reversal of the 39-point loss that you saw on Friday in very light trading heading into Memorial Day weekend, but hey, you had, gains on top of that, and the S&P 500 again kind of knocking on the door of being, 4 or 5% away from new all-time highs despite trade concerns. And so I think that ultimately here's where we are, I think. The next 3 to 4 months are going to tell the story. And I'll tell you why I think that time frame is important, is ultimately, what we care about in markets and what we care about in the economy is the rate of change of different metrics. And think about it. If you own or even work in a business, which is probably most people at some point in their life, most people have worked in a business at least once. But the thing that you are always the thing that's always in the back of your mind is, hey, how are things doing relative to last month, last week, last year? How are those changing? And ultimately what you get to is, regardless of, what's going on from a policy perspective, you get to a certain point where you're like, okay, like this is normal. This is just how we have to operate, and we're going to do whatever we do with this, good, bad, or otherwise. It's the reason why inflation did not permanently run, or at least it's one of the reasons why inflation did not permanently run at 9% after 2022. It's, the reason why unemployment didn't stay at 10% after 2008 is eventually people and companies decide, okay, you know what, we got to take that chance and we got to move on, and it becomes easier to beat bad year-over-year marks when you get to the next year and you say, okay, all we need is a little incremental improvement and things can get better. So I think, quite honestly, if you get to next January, February, and you haven't seen any real shift in where the economy has gone, it probably starts to look pretty good at that point, because businesses say, hey, like things haven't fallen apart. Okay, we can take that additional risk now. And you have easier year-over-year comps to beat because you're going up against, the first imposition of tariffs. And great, we can, kind of take off from here. On the other hand, if you look out the next few months or so and you start to see things slowing down, that potentially impacts business confidence heading into next year. And that's where you start to get more of those decisions being made about, hey, do I actually need to hire as many people, this and that? So I think ultimately by somewhere in that window of Labor Day to Thanksgiving is when we're going to have clarity about where this economy is going. I know no one wants to hear that, but it takes time for all of these, different tariffs and policies to actually seep into the economy. They don't just happen overnight. And so we're still in a period where that effect is developing, just because most of the stuff that's being sold today in stores or wherever is still pre-tariff merchandise in many cases.
That does assume, though, that all of these, or many of these negotiations are resolved with trade deals concluding in July, or maybe it's extended even further and you could see this thing drag out longer than that, though. I feel, who's to say that there isn't frustration at the negotiating table and that these tariffs, the reciprocal ones, are put back in place, or some sort of retaliatory tariffs are put in, perhaps not as high as the ones that were suggested by the reciprocal ones. I just feel as if the landscape could change from where it is today, and then that kicks out our sort of, it's not deadline, but kicks out when we could have a clear view on the economy. I just wouldn't put that past the current administration necessarily.
No, it's fair, but even then, let's say negotiations go badly. Isn't that the sign that, okay, things are going to worsen then? Like if tariffs, get ratcheted up further and actually stay in place? Or I guess even what I'm getting at is we're getting to the point. I mean, look, what we just saw over the last 5 days was Friday, hey, we're thinking about doing a 50% tariff. Was it Monday or
Sunday?
Sunday. I don't even know when it was. It was within 72 hours. Okay, we're not going to do this actually.
Mm-hmm.
And I guess what I'm getting at is that the actual tariff rate is not what is going to be the driver if this goes on long enough, because businesses are just going to say, look, I got to build this into my models that I don't know where the tariff rate's going to be, and I have to operate with that uncertainty. It does create a situation where businesses do pull back on leveraging up, because you don't want to be employing as much leverage in the event that you don't know what your cost structure looks like. But businesses might just say, okay, I won't leverage up as much, and instead of planning to scale up by 10%, we're going to scale by 5%, and we can do that with minimal leverage, and we'll go from there, and maybe that's, kind of the new equilibrium that we see. But I guess my point is just that nothing lasts forever as either an economic or market regime. These things are always evolving because you always get used to that new baseline. It's kind of like, hey, we've got, gas prices around, $3.15 on the way up. It felt bad going from $2.50 through $3.15, But as you're coming back down from, $4 a gallon, you're like, yeah, I can deal with $3.15. I'll make that work in my family budget.
Right.
It's not ideal, but I can work that somehow. So I guess that's what I'm getting at is eventually as humans, we just find that, what's the word? Homeostasis. The human body returns to 98.6 degrees and you get there. The only things that prevent you from doing that is, if you jump into like 30-degree water, which we did on April 2nd, bad if you stay in the water for too long. Or likewise, hey, like we're in the middle of the desert, we don't have any water now. That's kind of May of 2022 when things were too hot. Yeah, you can't do either of those, forever. But generally, if it's just, hey, this is uncomfortable one way or another, humans kind of figure it out, I guess, is my point. And I know that's not, the sexiest thing to say because everyone wants markets to either go to the moon or, to... We don't have a phrase for where markets go when they go down, do they?
Crater. But not like it's not a destination.
Because you can go to the moon or like when markets go down, you go into the Earth's core.
The pit.
the Valley of Despair, what's the place? Death Valley.
That's
the one.
Pretty good.
You can either go to the moon or Death Valley,
Yeah.
but sometimes markets just hang out on the Great Plains munching along like a little buffalo. And that's fine too. It's fine to be the market buffalo. Let's take a quick break. When we come back, talk a little bit. I want to talk about this piece from Ernie Tedeschi. It's on tariffs, and this is some empirical data that backs up a little bit, I think, what we're talking about here. So I want to talk about this piece, and then we'll do a little bit of an Nvidia earnings preview as well.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visit usvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
All right, so Ernie Tedeschi is someone who previously has worked in the White House Council of Economic Advisors. He also is the Director of Economics at the Budget Lab at Yale. And as painful as it is for me to say good things about a Yaley, Ernie kind of knows his stuff when it comes to macroeconomic data. And basically what he points out is, look, the average effective tariff rate of stated tariffs is about 18% on U.S. imports based on, what goods are imported from what countries and what percentage of our, imports they make up. And I'll quote here from this Bloomberg opinion piece from him. Based on actual federal tariff revenue, the average effective rate in April was around 4.5%, and preliminary data for May suggests it was around 6.5%. In other words, tariffs weren't biting at full strength in April or May, which means it'll still likely be hard to see signs of the effect of tariffs in the May economic data. And basically what this means is, same thing that we talked about, companies paused shipments of, highly tariffed goods during these time or reduced them. And so, yes, there is additional tariff revenue coming in, but it's not indicative of importers bringing stuff in at full speed. And as such, you're not going to be seeing price increases reflected immediately. It takes a little bit of time for these to build up for the very simple reason companies tried to front-run tariffs for, so they don't have to pay as much, and they're going to work through that inventory before reordering, and even after they reorder, it still takes, couple weeks for the factory in China to make it, a week or so for it to get to the boat, a few weeks for the boat to go, and then they finally pay the tariff. So it's like a 5 or 6 week delay before that tariff is even paid. So what Ernie gets at here is, look, you're going to finally start to see the impact of these tariffs probably June, July, August, as you actually get that new wave of imports coming through. And we don't know exactly how that's going to, at that point, impact buying behavior, selling prices, margins, and all those different items, because we've just never seen an increase of this magnitude in the last 100 years.
Yeah. What I liked in particular with this piece, Chuck, is that he cited an example from 2018 that gave good context to what type of lag we could expect in terms of tariff impact. So back in January of 2018, when President Trump got into his first term in office, he instituted anywhere from a 20 to 50% tariff on imported washing machines. it really wasn't until April of 2018 that you actually saw the CPI for laundry equipment surge substantially. So basically, just like you were alluding to there, about a 3-month lag from when the tariff was announced on imported washing machines to the point 3 to 4 month lag to where you actually saw it come up in the CPI data. When you look at durable goods in general, really what's been happening here for the most part, if you're looking at electronics equipment or washer dryers, things of this nature, companies have been burning through a lot of their pre-tariff inventory. So perhaps could take a little bit longer for electronics and furniture for that CPI data to reflect. And that's the point we've been hammering home really for the last couple of weeks is unfortunately it continues to be wait and see on the full impact of the tariffs.
Yes. So you can listen to the financial exchange in May and then go away. And in like August, you can turn us back on and it'll all be good. You can obviously listen in the meantime. I mean, look, we all need, stuff to do during the day, and we love having you listening to us.
Or watch us on YouTube.
You can do that too?
Oh, yeah. Twitter, YouTube, you name it. We're out there, baby.
It's amazing. It's amazing stuff. Let's talk a little bit about Nvidia. Speaking of amazing stuff, they've got earnings coming out later today, and I think the question that there are a few questions that people want to see. The first is, hey, tell me how much you beat your earnings estimates by, because if there's one thing that Nvidia has been really good at, it's beating their earnings estimates. Obviously, if they don't, that means something very bad. Number two, tell us about your pipeline that's looking, that's out there. Are you seeing any degradation in that pipeline? Are some of these new deals from the Middle East starting to bear fruit as far as, where you think you're going to be sending shipments over the next 12 to 24 months? What does it look like for you in terms of what you're seeing? And from a margin perspective, there's more competition in the chip space now as companies are trying to find, alternatives at lower cost. Are you seeing any kind of margin pressure as well? So these are the things that I think we want to, look for. And obviously, this is going to be a huge driver of where this market goes over the next week or two, simply because it's a massive company with a huge weighting in U.S. indices, and either a success or failure on this earnings report today is going to have some implications for where this puppy goes from here.
Yeah, we had seen Nvidia drop significantly through the first 3 or 4 months of the year and then rally back 40% from its April low that it reached. It's now 9% off of its January high. Obviously, what was announced recently that governments in the Middle East committed to spend purchasing Nvidia chips, and then you also had sort of on the negative side of things, Nvidia had to write off $5.5 billion of inventory last month explicitly to comply with U.S. restrictions on chip exports to China. So that will be in focus, as well as you mentioned, the gross margin piece of things. There were some manufacturing hiccups in a recent quarter with Blackwell, their newest chips. So scrutinizing where they come in on the gross margin perspective, hopefully somewhere in the 70% range is what they're anticipating. That's what's going to be in focus today. Nvidia is now trading at about 29 times projected profits over the next 12 months, a little bit lower than their 5-year average. I mean, it's been trading rich for a while, so I'm not saying this is some huge discount, but that really will be in focus today. From all the other earnings reports we've got in the tech sector, and they are the last really to go here, Microsoft, Meta, and others, it does look like some of the biggest hyperscalers that really are some of NVIDIA's largest customers, they did not offer any sort of mentioning of weakening capital expenditures, going forward here. So it does appear to be, demand is still running on all fronts. So I would be surprised, outside of a real manufacturing issue, if they came in under their numbers. I would imagine that this quarter fared pretty well, but we'll see more at the close of the market today from what they come out with.
Yeah, and I think the big one, the big one for me is just, look, how quickly is both revenue and profit growth slowing? I mean, ultimately, that's what is going to matter. And here's what I mean by that. NVIDIA revenue growth peaked in January of 24, where it was running 265% year-over-year revenue growth, which obviously you can't do forever. Even in the second quarter of that year, came in at 262. The last three, it's printed 122, 93, and 78, and expectations are for 66% year-over-year revenue growth. Right. Now, so again, you kind of extrapolate this out, and you're sitting there and you're going, okay, where do you get to a point where that growth is no longer fast enough to justify the multiples that are being put on the stock? And part of this is, I think you mentioned this a little bit, hey, those multiples have been coming in somewhat, but are still steep. You take a look at forward PE ratios. Nvidia's 32 times its forward earnings estimates right now, but this is a lot cheaper than it was. You go back, I don't know, through most of last summer, and it was, trading 40 times, forward earnings. There still is a path where, hey, maybe it needs to come into, 25 or so, but does it do that through the stock price just chopping around 135 for the next, 6 to 12 months? Or does it do it through the stock losing, 15, 20% and then just hanging out around, 100 or something like that? There are multiple paths. There's also one where, hey, this is a regular CapEx cycle and we start to see companies pulling back on CapEx, and so that growth, goes away quickly and Nvidia's got to, reprice there. There's also a path where we start seeing more and more success from companies actually selling AI stuff, and Nvidia's got more upside here. So I say this a lot, be open to, things that might not fit your preconceived notion of how you think they need to behave. Let's take a quick break. When we come back, we got Wall Street Watch right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following yesterday's rally driven by the delay of tariffs on the EU, markets today are hitting the brakes, dipping into negative territory as Wall Street eagerly awaits Nvidia's earnings after today's closing bell. At the moment, the Dow is down by only 53 points, about 0.1%. S&P 500 down only 9 points, and the Nasdaq is off by about 32 points, about 0.2%. Russell 2000 is down about 0.5% or 10 points. 10-year Treasury yield up 4 basis points this morning, now at 4.47%, and crude oil is up 1.6%, trading just below $62 a barrel. Nvidia shares currently flat ahead of its earnings, as I mentioned, after today's closing bell. Meanwhile, investors are digesting more retailer earnings from Macy's, Abercrombie & Fitch, and Dick's Sporting Goods this morning. Macy's up by about 0.33% after the department store chain posted first quarter earnings that beat estimates. The company did, however, cut its annual earnings guidance to account for tariffs and moderating consumer spending. Abercrombie & Fitch shares are surging 26% after the retailer saw its quarterly sales jump 8% and lifted its full-year sales forecast. Abercrombie also said it anticipates a $50 million hit from tariffs this year, even after taking action to offset their effects. As for Dick's Sporting Goods, that stock is up over 1% after the retailer posted better than expected earnings and revenue. Dick's also reaffirmed its full-year outlook. Elsewhere, Okta shares down by over 12% after the digital verification provider swung to a profit and posted better than expected quarterly revenue. However, the company said it would maintain a prudent approach to guidance, citing economic uncertainty. After surging 24% yesterday on the heels of a strong Memorial Day weekend at the box office, AMC Entertainment shares are retreating by about 11% today. And also after today's closing bell, we'll see earnings from Salesforce. I'm Tucker Silva, and that's Wall Street Watch.
We have a piece here from Axios. It's a study they did, not a study, a survey they did, basically asking Americans, hey, what do you think about AI and, how do you want companies to go about it? And first question that I'll ask, Paul, before I even get to the results, is this survey useful in any way, shape, or form?
No.
Okay, now that we've said that,
I could extrapolate too, I guess. But
no, that was great.
Okay.
I think that was fantastic. Like I love everything that you did right
one-word
there.
answer.
So basically what we see is through the 2,123 adults surveyed by Axios, about 77% of them want companies to, quote, create AI slowly and get it right the first time. Who cares? Like, that's I'm not saying this because I want AI to, like, rush through and end up, like, killing us all.
Right.
I'm saying this because why does public opinion matter for what individual companies are going to do with their business decisions? And do we have evidence that if companies move quickly and don't get AI right the first time, are people going to change their buying or spending habits? I don't think so unless it actually kills us all.
No, if you just look back at any type of new technology, there's always going to be resistance to it. There's always going to be skepticism as to how integral it becomes a part of daily life, whether you're looking back at computers and the internet in the 90s, the mobile phone, all the iterations that we've seen on the technology front. I'm sure there was a lot of resistance from many people in terms of those development. But if you look at just the competition and how businesses progress over time, it's particularly in the technology sector, move fast and break things. And that's what they're going to continue to do. They're going to spend exorbitant amounts of money to try and become the preeminent player in this space. However, that takes way, shape, or form, we're not sure. So this polling it's not going to change anything in terms of the way businesses act or conduct themselves. So it is something that it really, you don't need to even take it with any grains of salt. It's just noise.
I guess like the piece that I come back to on this is, I'm sure all of you guys remember all of the problems that Facebook went through with like data sharing and privacy. I forget all the different things that happened or continue to happen in this and that. And there were multiple polls of Americans like, what's do you think that it's good that your data is being shared this way or that way? There's even one I found from Pew back in 2018. 42% of Facebook users have taken a break from the site in the past year. 54% adjusted their privacy settings, which I will call bull-loney on. 26% have deleted the app from their phone. Has any of that made any dents in Facebook's actual business over the last 7 years now? No. And so there are two possibilities. The first is that the people who are responding to these polls are lying, which I don't think is true. The second is that despite, having very negative views about, in this case, we don't want AI to move too quickly, people aren't actually going to change their behavior as a result of it. And that's what it is. Like, it's hard for people to change their behavior. This is also why it's hard for the United States to have a recession, is usually you just keep on doing what you're doing. Even if you voice your displeasure about something, you generally keep doing the same thing over and over because, and this is true of just about anyone, the unfortunate psychological reality for humans, it's usually more comfortable to fail in familiar ways than to, go and try something new and fail that way because it just feels safer to keep doing the same thing over and over.
Right.
And quite honestly, most of the time, like, it is safer to keep doing the same thing over and over. This is what, thousands of years of evolution have taught us, which is, yes, like, go and, hunt over by that stream, but don't go, like, when you see a tiger there, because if it looks different, it's probably not safe. And so, like, we do the same thing with social media now is, it's so nice just scrolling through my Instagram feed. This feels safe. And meanwhile, you're just being bombarded with, images of, your life should be better than it is. Like, you should feel bad about yourself. Buy more, buy more, buy more. And that's why I don't have Instagram.
That was a lot to chew on, but I'm I'm with you.
I've been talking a lot, Paul. What do you want to say?
I think that the point that you made that is interesting is that it's easier to be content with sort of what is known out there, and there is going to be aversion to new technologies. But ultimately, if you want to make a dominant business, then creating the first of something can really lead to, just look at Facebook or Apple with their iPhone, tremendous profits and a substantial market share for a long period of time. And that's what everyone's chasing here. Who is successful or not, we don't know. And what success looks like when it comes to AI, still uncertain. But that's what's going to happen regardless of how people feel about it.
Do you think Meta should change their name again? Because they changed the name to Meta trying to make the metaverse happen. They're still doing it, by the way.
They're
spending like $40 billion a year trying to make the metaverse happen. Wow. On what, I don't know, because if no one's using it, how could you be spending the money? But that's neither here nor there. Do you think they should change their name again? Because now they're like going more in on AI. Like, should they change the name to like artificial?
Llama instead of Meta?
Oh, to Llama? What about Meta Llama?
Not bad.
I mean, the easy one is Meta AI.
Yeah.
Something dumb like that.
No, that's not a big enough change.
Meta AI.
I kind of like Meta Llama.
If they go Meta AI, it's like all the Max and Plus stuff. I feel like they're just ripping off because you have XAI. Yeah. It just seems like everyone is just throwing
MetaMax.
MetaMax.
Metamucil. Let's take a quick break, and when we come back, let's talk a little bit about the housing market after this.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Paul, we got a piece from NPR. It's on the housing market. The headline is, quote, "We're in a holding pattern. Home sales and building slump in the face of uncertainty." What's it talk about here?
A couple pieces that it hits on here. Sales of existing homes are still 75% off their pre-pandemic levels. Multiple different reasons for this. One certainly being that you have interest rates on the 30-year fixed mortgage hovering around 6.8 or 6.9% compared to where we were in 2020 or 2021, where the 30-year fixed mortgage was anywhere from 2.75 to 3.25 in that range. So that's been part of the reason. We saw in the month of April the slowest April for existing home sales in 16 years, and we do have home builder sentiment dropping to levels that we haven't seen since November of 2023. You know, some of that is potentially concerns about tariffs and the direction that they'll take. However, the NPR piece does point out here, while imports from Canada on the lumber side, about 1/4 of softwood lumber is used in construction of many homes. Even with that 14.5% duty that is assessed on lumber for imports from Canada into the United States, it's still, the lumber costs doesn't account for a significant cost of a new home build. So that necessarily isn't the entire reason, but perhaps some of the increased inventory levels that we're seeing here on the existing home sale side of things, you know, inventory being posted has led to a little bit lessening demand for new homes out there. It just, a lot of factors going on in the housing market at this point, Chuck, but it doesn't seem like there's tremendous momentum in one direction or another.
Paul, do you know what the difference between hardwood and softwood is?
No idea. When I was reading the piece this morning, I'm like, I should know what softwood lumber is, and I have no clue.
Good examples, most pines and spruces and stuff like that, softwood.
Mm-hmm.
Hardwoods are things, you know, ash, maple, stuff like that. Those types of woods are hardwood. Interestingly, one thing that I did learn in my research this morning, it's based on the type of tree, and kind of it's not based on how hard the wood is, which is what's interesting. It's based on softwoods. They don't have vessels that help them transport water up and down the trunk, and so interestingly, balsa wood, which is like generally regarded as like the softest wood out there, is technically a hardwood because of the formation of the tree, which is wild to me. So that's my contribution.
Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning, and their new guide is called Detour Ahead: Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for some problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of their new free guide called Detour Ahead: Estate Planning Blunders to Avoid. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I want to talk a little bit about what's going on in the auto market. According to data from Cox Automotive, auto dealers now have just a 43-day supply of used cars on their lots. That is the lowest level for this time of year since 2021, and this is due to people racing out to try to buy used cars before more used cars come from cars that previously were sold as new cars with new tariffs. So it's people basically trying to buy used cars before new cars become used cars.
Buying
used cars it's wild.
Buying used cars instead of new cars.
No, it's people trying to buy used cars before new cars become used cars.
I mean, yeah, I guess so.
Like, that's what it is, though. It's people trying to front-run tariffs on something that is not tariffed. Which is wild.
Right.
It's because like the only thing that's tariffed are new cars that are produced outside the United States.
Sure.
And so it's people trying to buy used cars before new cars that are sold today become sold as used cars in the future.
Right.
Which is kind of weird because like it doesn't just happen right away. Like I can understand wanting to buy a new car before tariffs hit, but wanting to buy a used car is effectively creating the pricing pressure that you would otherwise seek to avoid. Because here's what's happened, is the average price of the 50 best-selling used cars in the U.S. has gone up each week over the past 2 months to nearly $29,000 now, according to Cox Automotive. So those prices have been going up because of demand for used vehicles. Again, remember, used cars are not tariffed because they're already in the United States, and unless someone is buying a new car today and then selling it tomorrow, the tariff on that new car is not making it into the broader ecosystem. So this is, I think, a great example of, hey, even on goods that are not subject to tariffs, we're seeing changes in buying patterns that are affecting pricing to the upside here.
Yeah, you have a new car coming in at $48,000 average price, and like you mentioned, up to $29,000 on the 50 best selling used cars there. And as a result, just on the new car side of things, North American factories produced 8% fewer cars in the month of April. So a chain reaction there where North American factories sort of peeling back the production that they need on the new car side of things. On the used car, the tricky piece is that there's not a tremendous amount of inventory becoming available. Rental car companies have trimmed their fleets, and you've got not many leases coming from the pandemic era. There just wasn't a lot of leasing during that period, so not a lot of used car inventory coming out on the market just yet.
And apparently this means that you're going to have, I'm quoting just from the source here, that these prices are probably going to remain elevated for the coming months. There's nothing that is, resolving that, as you noted there. So I think, again, you factor this into what does it mean from an inflation perspective, and these car prices all go into it. Beyond that, then insuring these vehicles is getting more expensive. So there's a bunch that is, it's not yet printing in the inflation data, but the more real-time data that we are getting out there indicates that you're starting to see some pricing pressures that are, bubbling under the surface, and probably in the next couple months they start to pop up and make themselves a little bit more apparent. Let's take a quick break here, but hour two, we're going to be talking Apple. We're also going to be talking a few more companies reporting earnings. And then also, we got another data breach. It's been a while since we've covered one, but our data breach of the week, we've got that today as well. We'll fill you in on that in hour two.
cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CMFM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Hour 2 here on the Financial Exchange. Chuck, Paul, and Tucker with you, and markets are very modestly drifting down today. No real movement, but the Dow's off 80 points. The S&P is down 10. Nasdaq's down 7. Again, is that meaningful? Probably not, but it's what's happening. We are seeing some real movement in bonds. 10-year is now up 6.7 basis points, back up above 4.5%. The 30-year is back up above 5% as well, after rising 6.8 basis points. So you've got a little bit of renewed pressure towards higher yields after a brief move downward over the last day or two. We've got oil, West Texas Intermediate, up 78 cents a barrel to 61.67. And we've got gold up 20 cents an ounce to 3,360 cents. Top story this hour, this piece from the Wall Street Journal. Tim Cook's bad year keeps getting worse. Is Tim Cook having a bad year, Paul? Is Tim Cook having a bad year?
It's been a rough year for Apple, Chuck. A couple things that they've...
Well, they can't all be good. Like, it bothers me to no end when people are like, I can't believe they're having such a bad year. Why? Like, are things just supposed to move in one direction? Now, granted, they're facing a lot of crap right now.
This is a lot. This is a lot.
Still, like, I have no sympathy for Tim Cook. This is the business you've chosen. Not to go all Godfather 2 on us, but every business has trade-offs and every position has trade-offs. And if you are the CEO of one of the biggest tech companies in the world, you got to deal with this. If he didn't want to do that, he's got enough money. He could just leave.
No question. He had done a tremendous job over his tenure since he took over as CEO, but now, like you mentioned, he's facing challenges. The most recent one, of course, is President Trump threatening to impose 25% tariffs on iPhones that would be forcing them to come to the U.S. to make those. Currently, the majority of those are manufactured in China, though they are continuing to ramp up their presence in India. President Trump not thrilled with that. So that's one major issue that we can get into. The other one that he's battling is a lot of different legislation cases here, 2 against U.S. judges. The EU and regulators at the state and federal level are coming after their iPhone, the services division in particular. One federal judge, Ivan Gonzalez, had come after Cook, saying that Apple had ignored the injunction to allow app developers to have buyers or consumers bypass the steep fees that Apple takes on App Store purchases. Apple takes 25% cut. There's been many lawsuits coming after him saying that there needs to be another way where people could pay for services on the App Store outside of going through Apple's directory there, basically. And then you also have weakening market share in China. They've really struggled selling iPhones in China. And then the threat potentially of AI, which they are not a significant player in at the moment. So it is a lot.
So let's talk about a few of these different things. First, Tim Cook took over as the CEO for Apple back in late 2011, I believe it was. And I went and I pulled the chart for Apple since then. And here's what I saw just in looking at Apple over the past, 14 years now?
Mm-hmm.
Do you know how many 20% drawdowns, separate ones, Apple has had since Tim Cook became CEO?
5.
Very good, 5. Actually, 6, I guess, if you count the current one. So they've had 6 of them. There was one in 2013, about 2 years after he took over. There's another in 2016, a few years after that. Another one in 2019, another one in 2022, and now this one. I'm sorry, another one in 2020, obviously COVID, and now this one here. So he's been through 6 of these. So the first thing that I'll say is, look, Apple in and of itself sees a 20% drawdown every 2 to 3 years. That's kind of how the business works. And how many times have I heard these stories? Gee, Apple's having trouble selling in China. Oh, this latest iPhone replacement cycle isn't taking off. There's always some story like that that's out there. And I guess it's kind of a compliment to Tim Cook to be like, hey, every time they've been faced with these different challenges, they've figured it out pretty darn quickly, because on each one of those different instances, I'm not just looking at stock pullbacks that then hovered in flat. The stocks hit new all-time highs after each of these. And so they're pretty good at fixing their problems. With it, like once the problem develops, they typically fix it within 6 to 8 quarters, which is kind of remarkable. Like that's pretty good. And so I know there's like all this hand-wringing now about, again, I feel like the AI is the one that everyone's all, what's Apple going to do about AI? And it's like, who is looking for generative AI in their daily life?
It's not today, but it's all about, the future. I guess the counter argument would be, and I'm not going to go against the track run he's had at all, but
sure.
Has there been innovation over that period of time that compares to, one of the greatest innovators in the space, his predecessor, Steve Jobs? Not really. I don't think that there has been tremendous amount of new products unveiled. I'm not arguing that Tim Cook has been a tremendous steward of the company, and he deserves a lot of success for the supply chain intricacies that are in place in China to this point, and just running Apple really well over this period of time. But the new product piece...
Well, I guess here's the other piece that I come back to on AI, because that's the new product, that's the new shiny thing that everyone is focused on. People seem to forget, because I know that with AI, it's like, oh, we got to do it now. We got to be first, because I don't know why. Pause for a second. Does anyone know why, if you're not, like, first with AI, there's nothing for you?
That, to your point, that a consumer or, individual behavior will just get accustomed to using one particular service and they dominate market share. But to counter myself, there's nothing to say that you can't come out with a better version than the first product and become the go-to source out there. Google's an example of that. They weren't the first search engine out there. They just did it in a unique way that was better than their peers. Apple, which you're probably going down this direction with on the music device piece. They weren't the first thing. Numerous things. They weren't the first thing. Their iPad, that's not the first, tablet device that had been unveiled. Far from it. Same thing with the iPod. None of these were
the
first.
iPhone was not the first. People forget BlackBerry was the dominant player in that space for 5 or 6 years, and Apple came along in 2007 and said, oh, that's a nice little smartphone market you got there. It'd be a shame if anything happened to it. And they ran roughshod over them. So I guess what I'm getting at is, I'm not really convinced that Apple needs an AI thing anyways, just because I just don't know that that's... I don't know that that's who they need to be in their market that they operate in. But even if you say, okay, they do need it, they don't necessarily have to be first. And I think it's also been shown that, hey, they've been able to leverage their market power into some pretty good deals for Apple as well. Granted, one of them is now, under threat, the money that they get from Google because of Google's own antitrust cases that are going on. But Apple didn't develop a search engine. Instead, they said, hey, all you search engines out there, pay us in order to be the default one on our platform. And Google said, fine, no problem. And now they're getting like $15 billion a year.
$20 billion
from
a year.
Google. Yeah. So I kind of look at it and I go, all right, if Apple doesn't develop its own, native AI platform, and if AI turns out to be, to have real staying power, and if it does what everyone hopes it's going to do, you don't think OpenAI is going to be like, hey, we'll pay to be on your platform so that Perplexity doesn't, become the, default, or Anthropic or Claude, all. I guess I just kind of look at it and I go, why does Apple need to always be the developer of it? Apple's made its bones. Apple's made its bones two ways. They've developed a great hardware-software interface that makes everything really easy to use.
Yep.
And then they've monetized the heck out of it at every juncture possible.
Mm-hmm.
I don't know why they need to be like the AI company.
Yeah, to your point, they have the position where they can offer, just as recent search here, 1.4 billion active iPhone users worldwide. So you think any AI platform out there that becomes successful would want access to that user base. Now, the argument being made here is that maybe iPhones aren't, the hardware device of the next 10 years, but that's a story for another day as to how that plays out.
Are you going to get the brain chip when they make one?
I want to be really late to that. Really late.
Tucker, what about you? You getting chipped up if they
Yeah,
come
why
out
the
with
hell
like
not?
if they got the iBrain a few years from now? Are you getting iBrained?
Yeah. First edition, I'll be the guinea pig, if you will. Sure.
Yeah.
Why not?
Make sure you pay for the extra memory.
I could use it, yeah.
You could use a little. All of us could. Let's take a quick break here. When we come back, let's see. We get some trivia, and then we'll talk about a headline that's already out of date as it relates to treasuries right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, let's do a little bit of trivia here on the Financial Exchange. And on this day, back in 1936, Alan Turing submitted his paper on computable numbers for publication. The paper is notable for setting the groundwork for modern computing. Turing would go on to be pivotal in the war effort, likely saving millions of lives with his work. So, trivia question today. Who portrayed Alan Turing in the 2014 movie The Imitation Game? Once again, who portrayed Alan Turing in the 2014 movie The Imitation Game? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Tucker forwarded on a text from...
No name, from someone listening. Quote, being first in AI refers to AGI and ASI. AGI being artificial general intelligence, which is, something that can actually think like a person, and ASI is artificial superintelligence. The self-improving type that will stay ahead forever with truly novel discoveries and abilities. I mean, okay, if you think that's where we're actually heading, fine, that's... I guess here's what I get at on even this, because I really want to dig in on this whole AGI thing, this artificial general intelligence piece. What happens once we... let's say that we get there and someone, develops artificial general intelligence. What then? Okay, you've developed it. Mm-hmm. So what do you start doing with it? Do you start just replacing humans in all jobs? Because now you got a bunch of people just sitting around. Mm-hmm. And I can tell you that there's one thing that governments don't like. It's a bunch of people just sitting around.
I think we can all agree it can be destructive.
Because usually things start to get ugly when everyone's
right.
just sitting around.
Right.
And furthermore, then you get into the age-old question, which is a great one, by the way. Let's say that you had one button that you could push in order to operate everything on Earth. And all you had to do was wake up each morning and push that button, and the food got grown, the steel got made, the everything that needed to happen happened. Well, how does everyone actually pay for all of that stuff then? Because if no one actually has to work, and again, I know we're jumping ahead, but this is all this futurist stuff that I get kind of skeptical about. If no one has to work, then all we're really dealing with is a resource distribution problem. How do you make sure that everyone has what they want? Do we have any good ideas about that? The answer is no. We've got a bunch of crappy ideas. But we don't really have any good ideas about that.
That would be very problematic, that shift. Capitalism is probably one of the greatest ideas that has been built over the last several hundreds of years. So to completely get rid of that system because there's no need to really amass assets would be really problematic.
I just don't know what you do. I'm
right.
not saying it's good or bad. I'm just saying, what do we do then?
Yeah,
and there's no good answer for it.
On the piece on, how would we utilize AGI, hopefully the optimistic version would be to replace some human workers but increase productivity and hopefully grow the economy at a faster pace. But
if it's general intelligence, meaning it can learn and adapt and do all kinds of different things, why would you stop at replacing some human workers? I'm not saying this is good or bad. I'm just saying, hey, if you had something that could learn and do all of this stuff
and create and innovate, yeah.
Correct. And so I guess it also then gets at why do you have to be first there? Why is there this assumption that whoever gets to AGI first wins?
It's getting there first and then harnessing it to whatever your end goal is.
So, again, I don't like to speculate like too far out because I have no idea if any of this stuff is even going to work. Like, I went on ChatGPT trying to make me an ordered list of numbers yesterday, and it couldn't even do it. Like, it was just not ordering numbers correctly and not adding them up right. And so part of me is like, hey, we got like a long ways to go until we get to, artificial general intelligence. And this is before you even get to the really disturbing questions of, hey, what if you assign your AGI, hey, I want to, figure out ways to reduce energy usage in order to maximize, the utility of every drop of oil we have left on the planet. And the AGI comes back and says, great, I'm going to kill all of you because then no energy will be used. I mean, technically it solved the problem, but not quite in the way that you planned on it. Or let's say that you say, hey, you know what I'd like you to do? AGI, I want you to figure out how to reduce my headcount to minimize my staffing. Great, I just fired everyone. What should I do next? Well, I didn't want you to do that. No, your staffing costs are minimized now. Well, okay, I guess we'll have to work. So I understand the promise of it. I can't get over that hump. And look, maybe in 5 years right now, our AGI overlords are going to come down and be like, you should not have doubted me. Because that's how your artificial intelligence will speak. But I can't get there right now with what I'm seeing. I do think that some form of AI combined with what we may see in robotics over the next 5 to 6 years could actually pivot this on its head and be like, hey, maybe this isn't great for people who do manual labor. Right now, we only think it's service sector workers that could be impacted. Maybe it's not. But I can't get to this whole AGI thing right now. Let's take a quick break. When we come back, we'll do the trivia answer.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, who portrayed Alan Turing in the 2014 movie The Imitation Game? That would be Benedict Cumberbatch. David from Fort Smith, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to David. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
All right, we got a piece yesterday from, or I guess this morning from Bloomberg. U.S. 30-year yield falls most since March as investors lured back. In the time since this was printed, the 30-year is back above 5%, up another 5.7 basis points. So I guess, look, maybe we shouldn't read too much into what happens over one day in the bond market. I think it's more important to pay attention to what is going on with trends over, at least a period of weeks, probably over a period of months. And to this point, the 10-year yield has basically been trendless over the last year. A year ago, on 5/28/24, the 10-year opened at 4.46 and closed at 4.54. It's at 4.49, right in the middle of that range now. So it hasn't gone anywhere. It's gone as low as about 3.6% last September. It's gone as high as around 4.8%, 4.9% in January of this year. It's basically been trendless. There has not been any intermediate term trend over the last year or so. You can make a case that since April 2nd, we've seen a fairly steady uptrend of the lows being higher and the highs being higher. So there's kind of this, process that's moving there. But I think that sometimes we just want to read too much into what's happening on a daily basis. And I've said this, both ways. Like, hey, yesterday was the U.S. deficit problem solved, and investor was like, great, we can buy all these bonds now? Well, no. Likewise, did the deficit picture worsen meaningfully today from yesterday? Also no. So I just caution people on these pieces. Any thoughts, Paul?
On the U.S. 10-year Treasury piece, it is fair to say that the term premium is the highest it's been since 2014 to own the U.S. 10-year Treasury. That, to me, at least reflects some of what's going on in the bond market recently. But I agree with your other sentiments that the bond market doesn't move that rapidly, that there needs to be a day-to-day update as to why rates are trending in one direction or another.
I think ultimately, when looking at rates, it comes back to two things. What's growth going to be and what's inflation going to be? If growth and inflation are both high, rates need to go way higher. If growth and inflation are both low, rates need to go lower. If we're basically just going to be on the same track we were on last year, you can probably hang out somewhere between 4.2 and 4.8 on the 10-year, and you're absolutely fine. The interesting piece is, hey, what happens if one of these pieces goes higher and the other stays the same, or one goes lower? Example, or what if they move in opposite directions? This idea of stagflation. What happens if growth goes down but inflation goes up? And Jay Powell's talked about this a little bit in his press conferences, basically saying, hey, we got to go in whatever direction is the greater threat. If unemployment goes from 4.2 up to 4.7, but inflation goes from 3 up to 6, Fed's probably hiking.
Mm-hmm.
If unemployment goes from 4.2 to 5.7 and inflation goes from 3 to 4, Fed's probably cutting. The magnitude of each move matters as well. So I think we're in a really interesting time right now. I mean, my goodness, the amount of potential, just the sheer number of scenarios that you can picture over the next 6 to 12 months. I mean, it's a fantastic time to be looking at this and being able to, say, okay, here's what I think will or won't happen. But I don't think anyone should have any confidence that something's going to play out definitively, because we just don't know what growth and inflation are going to look like over the next 6 to 12 months, because the tariff picture's still evolving, the policy picture's evolving. And pardon me if you've heard this before, but we're just going to have to wait. So there's that.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently 2 of their beaches, Trunk Bay in St. John and Megan's Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI is everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Paul, why do we care about Macy's earnings?
It's one of the biggest stores out there, Chuck, right?
Why do we care about, we always get the front page news of, Macy's earnings were this and that. Is it just because they sponsor the Thanksgiving Day parade? Because otherwise, there's nothing particularly special about them. I mean, their sales are $23 billion,
It's
which
the name.
is...
It's a big name. That's all it is now.
Is it that even anymore? I mean,
it's a historical big name retailer, and they see the name and they just have to put it out there. But in reality, they're really in the same bucket as Kohl's.
I was just gonna go there. Tucker's favorite.
That's what it is.
His favorite.
It's literally
company.
Kohl's.
Yeah, and they're. again, it's not like they're like teensy tiny. I mean, they do $23 billion in sales, but the market basically believes that they're dead. I mean, they're worth $4 billion, not even $3.5 billion. So the market believes that, hey, you're not going to grow your sales. You're not going to do anything with it. So why should we care about you? I don't think they're much of a bellwether for anything at this point. Who is the Macy's target customer these days? I can think of two.
Older demo, right?
Elderly women on the Bloomingdale side of things.
It's got to be an older demo or people registering for weddings. But even that, like, look, it's been a while since I got married. Okay, you only get married for the first time once. Here's the thing. Are people in their 20s registering at Macy's, or are they just doing it at freaking Amazon?
It's probably Amazon.
Right?
Yeah, Amazon or Crane Barrel, those kind of ones.
Sure.
Yeah.
Yeah.
I mean, I went into a Macy's 2-3 weeks ago. It was like a random weekday, like 4:00 given.
You had nothing better to do?
I really had to use the restroom. So I went in there,
Love
and
it.
you had to
Recon.
You had to kind of voyage, to the red restroom.
Yeah.
But all I saw in the store were a couple of groups of older women, and that was pretty much it. Other than that, it was pretty empty.
Is Blue Mercury a popular brand on the beauty side of things?
I don't know what that is.
Never heard of it.
It's they own Macy's acquired them in 2015. And in this piece, they talk about investing more into their beauty chain, Blue Mercury. So any listeners out there can text us 617-362-1385 if it is in fact a big brand on the beauty side of things. I don't think so.
I don't know.
But it's out of my area.
In any case, Macy's cut their profit outlook for the year, and
they're closing 150 stores. They'll be down to 3.
I don't understand this. They've been closing 150 stores a year every year since I've been alive. Like,
don't worry.
How are they not out of stores?
They will have 350 remaining.
This is like when you get the box of fried rice, and no matter how much you eat, it's still full 3 days later. It keeps multiplying.
I wonder what they had at their peak for stores. It's got to be in the thousands, right?
I would guess.
No, maybe less, just because they took up so much square footage.
Macy's store count by year. Will anything show up from that? I don't really know. Here we go. Okay, let's see. They had at the end of fiscal 24. Okay, I've got something here. In 2015, they had 868 stores.
Yes,
that's as far back as I go.
That's all I've got too.
I don't know why it doesn't go back further, but
we've reached the end of the internet, Tucker. We can call it.
10 years ago.
Yeah, we can call it a day. The internet ended in 2015, which is after it began sometime. Let's take a quick break. When we come back, we'll do some stack roulette and see if we can find more stuff on the internet after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now. at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Paul, what do you got for me for Stack Roulette?
We talked a lot about AI earlier in the show, Chuck, as to what it looks like in the future. I can tell you one thing for sure with AI right now, it's being used rampantly in colleges and high schools across the country to assist with students doing their assignments. I talked with a couple teachers over the course of the last week or so, and resounding acknowledgement of a supremely immense problem it is for them when they assign students a paper or anything that can basically be done outside of the classroom. The use of ChatGPT to write that 5-paragraph essay on, name any classic literature novel out there, or for many types of complicated scientific calculations. It's everywhere. So what's making a resurgence in classrooms, and this was backed up by some of the teachers I spoke with, is handwritten blue book essays that you and Tucker and I would be used to back in the day in high school and in middle school, where there is much more of a focus. And the teacher I was speaking with this weekend said that I'm much more concerned in terms of their participation in class when they're speaking, as well as handwritten assignments that are done within the confines of the classroom. So you have a company out there called Roaring Spring Paper Products, which is seeing a huge surge in demand for their blue book notebooks that are used during exam time this time of year.
Yeah, look, this is a tough problem that I have some sympathy for because, as this piece talks about, look, you don't want to deprive kids who are, again, once you're in college, like, you're basically an adult. You don't want to deprive students of the ability to use tools that make that give them additional power and additional ability to do things. You don't. I'm guessing. I mean, I wasn't alive then, but I'm guessing. When power tools were invented, you didn't just have carpenters who said, "Well, like, you can't use those. Like, that's cheating." Like, no, I can build more stuff using the power tools, so let me do that. I think the challenging piece is trying to figure out what we're actually teaching kids in school and making sure that they're getting the balance of what we need to teach them. Because on one hand, if it's just knowledge accumulation, well, A, you're never going to just know everything. There's more. Contrary to what I said last segment, we have not reached the end of the internet. There's always more, and there's always more stuff to learn. So being able to use ChatGPT or Claude or whatever it is to get access to knowledge, I think is a really good skill to be able to have. It's kind of like how our generation grew up with search engines, and I'm always kind of amazed that people like 30, 40 years older than us are like, oh, like, how'd you find that? It's like, I don't know, like, I grew up using search engines. I just know how to get the result that I want, even though search engines kind of suck now because there's too much AI slop that permeates them. So you want kids to be able to learn these new skills, but they also need to be able to think critically, and that's historically what writing has taught us, is how do you structure an argument so that you can actually prove what you're trying to prove. And this, I think, is a key problem, which is if you're just asking kids to recite information, even in written form, what are you really doing? Like, it's actually kind of, looking at, hey, from a teaching perspective, are you maximizing it? Or are you helping to build the skills that they'll need in order to talk during, conversations with their friends, during conversations at work, like all the stuff that you need in order to actually be successful in life. And so I think this is a really interesting place that we're at right now. I have a number of friends that are either teachers or college professors, and there's no one size fits all. There's no great way to deal with this, but some of this stuff, like bringing back the blue books, helps to do that. And you want to balance it because you don't want to just like punish kids for having access to technology. Like, when we're going about our day, Paul, are we like limited? Is it like, oh, you can't use your calculator to solve that? Well, no.
I was thinking about the calculator example and Excel, everything of that nature.
But
Imagine
you also
if you're like, you can't do it. You got to do a handwritten.
But you have to have those baseline skills so that you can know, hey, is what the calculator giving me right?
Mm-hmm.
Is the calculator giving me the right answer? Is ChatGPT giving me the right answer? Because I'll tell you, as someone who uses these on a regular basis, there are places where I'm like, I don't know if this is right. I need to send this to a subject matter expert. And they'll come back and be like, yeah, 99% of this is right, but here's like the error that it made. And I wouldn't have gotten that otherwise.
Similarly, I had with a college professor, I was talking with this about that there's sometimes hallucinations that these models have, and there can be parts of the paper that they've put together that are just inaccurate. So it's critical that there's some back checking to it too.
I want to talk about this piece quickly from the Financial Times. It's titled, "Should Ordinary U.S. Retirement Accounts Be Investing in Private Assets?" Talking about private equity, private credit, hedge funds, things like that. And I go very back and forth on this. Because in general, for individuals, it's a really bad idea to try to replicate what large institutional investors do for two reasons. The first is you're generally not going to have access to the same caliber of manager that those big institutional investors do. And when it comes to private assets, caliber of manager is pretty much all that matters.
Yes.
The second piece is most institutional investors have a huge chunk of their stuff tied up in privates. And they can do that because they don't need access to all of it at once, and they generally have big pools of money that they can, kind of defer and move stuff around. The average individual does not have, all these big pools of money they can move around and tons of liquidity. So I don't love it as an idea. On the other hand, hey, should you not, be able to buy this in retirement accounts? Well, I guess where I come back to is, hey, when the retirement accounts are set up with tax advantages granted to you by the federal government, there has to be a pretty high bar for certain investments to be able to be included in that and have access to that giant pool of money. And given what I'm seeing in private investments right now, I'm not sure that it meets.
I worry that there's more risks than rewards with this proposition.
Yeah, it doesn't feel great to me. I guess we'll leave it there. Let's take a quick break, but hey, tomorrow we're going to be back. We got Nvidia earnings after the bell. We'll discuss what we see tomorrow on the show.